Right now, Strive Inc., ticker ASST, is trading at $1.55 per share. But that price is almost meaningless without the context of today's intraday action. The stock has been on a wild ride since the opening bell, launching to a high of $1.81 and touching a low of $1.35. This isn't a calm day of trading, this is a financial battlefield. The volume is enormous, already multiples of its daily average, and the reason for this chaos is that the company just dropped a major announcement that fundamentally alters its financial structure. Most investors who look at ASST see a small, highly volatile stock, almost a proxy for the crypto market itself. The expectation is that this is a simple, leveraged bet. If Bitcoin goes up, ASST goes up. If Bitcoin goes down, this stock gets crushed. It has become a name whispered in online forums, a stock that many trade on pure momentum, perhaps using platforms like the Robinhood app or SoFi Invest to get in and out quickly. The common belief is that this is just another company trying to ride the coattails of the digital asset boom, attaching its name to Bitcoin to attract speculative interest. The expectation is simple. The reality, especially after this morning, is anything but. What is happening today challenges that simple narrative. Strive announced, subject to market conditions, an initial public offering of 1.25 million shares of a brand new class of stock, variable rate Series A Perpetual preferred stock, which will trade under the ticker SATA. This isn't a simple dilution of common stock. This is a sophisticated and very expensive way to raise capital. These new preferred shares come with a $100 stated value and, critically, an initial monthly dividend rate of 12.00% per annum. The company is essentially taking out a high-interest loan from the public markets, and they are planning to use the proceeds for general corporate purposes, including, most importantly, the acquisition of more Bitcoin. This move completely reframes the conversation. This isn't just a company that holds Bitcoin, it's a company now aggressively leveraging its own corporate structure at a high cost to accumulate more. Let's break down what this trading action is telling us. The initial spike to $1.81 suggests a knee-jerk reaction, perhaps from traders who only saw Strive and Bitcoin in the headlines and bought aggressively. But the subsequent volatility, the swing down to $1.35 and the current battle around the $1.55 mark shows the market is now trying to digest the real cost of this new capital. A 12% annual dividend is a massive, recurring cash expense for a company that, according to its last reports, is not generating significant operational profit. Strive reported negative EBITDA of over $7 million in the last 12 months, even while showing strong top-line revenue growth. This creates a serious tension. The company is betting that the appreciation of its Bitcoin holdings will far outpace the hefty 12% coupon it has to pay on this new preferred stock. It's a race against time and a massive bet on crypto appreciation. This changes the risk profile for anyone holding the common stock, ASST. If you're a self-investing individual, perhaps using a platform like Fidelity or Interactive Brokers for your individual brokerage account, you now have to ask a new set of questions. This isn't just about the price of Bitcoin. It's about Strive's ability to service this new, expensive debt-like instrument. The company did state it intends to establish a dividend reserve at closing to fund the first 12 months of payments, which is a smart move to calm immediate fears. But what happens in month 13? This is where the expectation of a simple crypto proxy stock shatters against the reality of complex corporate finance. The company is now in a position similar to other Bitcoin treasury companies, but it's taking a very aggressive path. The firm already holds approximately 5,958 Bitcoins as of late October, and its subsidiary Strive Asset Management manages over $2 billion in assets. They are not a small player in this specific niche. They are, in fact, pioneering this model of a publicly traded asset management Bitcoin treasury company. The recent stock movement, even before today, tells a story of extreme volatility. Just last week, the stock was trading around $1.10. In late September, it was north of $2.40. And if you look at the 52-week range, it's a chasm, a low of 33 cents and a high of $13.42. This is not a stock for the faint of heart. It doesn't trade with the relative stability of an Apple stock or even the managed volatility of Tesla stock. It trades with a ferocity that can wipe out an entire position or create massive gains in a single session. This is why we're seeing such massive volume. Day traders, algorithmic funds, and retail investors on investing sites are all colliding trying to figure out if this new preferred stock offering is a sign of brilliant, aggressive expansion or a signal of underlying financial stress. To understand the company itself, you have to look past the ticker. Strive Inc., which completed a merger with asset entities, has positioned itself as the first publicly traded asset management Bitcoin treasury company. Its core mission is to increase its holdings of Bitcoin per share, with the goal of outperforming Bitcoin itself over the long run. This is a fascinating and bold objective. It's not just about passive holding. Through its subsidiary Strive Asset Management, it also runs other investment vehicles, including ETFs, managing over $2 billion. This isn't a garage operation. It's a real SEC-registered investment advisor. The recent appointment of Ben Workman as Chief Investment Officer to advance their Bitcoin strategy and the merger with Semler Scientific further signal their deep commitment to this path. They are all in on this digital asset strategy. This makes it a very different kind of investment from, say, buying into one of Fidelity's mutual funds or even a broad market ETF. This is a high-conviction, high-risk bet on a very specific corporate strategy. The people who trade this stock are not the same people parking their retirement in Schwab Intelligent portfolios. This is the active, high-engagement side of the market, and the volume we're seeing, with millions of shares handing hands, confirms that the market is paying close attention. The short interest on this stock has also been notoriously high at various points, adding another layer of complexity. When a stock with high short interest makes a volatile move up, it can trigger a squeeze, forcing short sellers to buy back shares at a loss, which only fuels the upward price pressure. That could be part of what we saw in the pre-market and early morning spike. So, where does the stock go from here? This is the central question. The future outlook is now entirely bound to two factors: the price of Bitcoin and the market's appetite for this new high-yield preferred stock. If Strive successfully places these 1.25 million SATA shares, it will have a fresh injection of capital to pursue its strategy. But it also starts a ticking clock. The 12% dividend obligation is real. If the crypto market enters a prolonged downturn, Strive's balance sheet will be under immense pressure. They will be paying out significant cash while their primary treasury asset is decreasing in value. This is the bear case, and it's a severe one. This is the risk that many institutional investors, who might prefer the more traditional services of Fidelity Wealth Management, are likely highlighting. Conversely, the bull case is just as potent. If the price of Bitcoin continues its upward trend, this leverage will act as a massive accelerant. By raising capital now, even at a high cost, Strive could be acquiring Bitcoin at what they believe to be cheap prices before a larger market rally. If Bitcoin doubles, the 12% cost of capital will look like a stroke of genius. In this scenario, the common stock, ASST, would likely experience a dramatic re-rating as the market values its now larger and more valuable Bitcoin treasury. The company's ability to outperform Bitcoin by a measure of Bitcoin per share would be validated. This is the reality that the bulls are trading on today, and it's why the stock is holding its ground despite the dilutive nature of the news. They see this as not a sign of desperation, but as a sign of confidence. I want to know what you think. Comment below with your price target for Bitcoin by the end of next year. Do you think it's heading to new highs, or is a correction overdue? Your answer to that question is probably the best indicator of how you should view ASST. As we look at the broader market, we see other tech and growth names like Nvidia stock facing their own macroeconomic pressures. But Strive is in a category of its own. It's not just a tech company, it's a financial vehicle built on a specific and polarizing asset. This is why so many different types of brokerage customers are drawn to it. A trader on Interactive Brokers might be using sophisticated option strategies to play the volatility, while a long-term bull on the SoFi trading platform might be slowly accumulating shares, believing in the long-term vision. The company's focus on shareholder value, which was a core tenet of its asset management arm even before the full pivot to a Bitcoin treasury, is a key part of its public-facing message. So, to summarize what we are seeing, the expectation that Strive, ASST, is just a simple speculative stock is incorrect. The reality is that it's the volatile leading edge of a new kind of corporate finance. Today's announcement of a high-yield preferred stock offering has thrown this reality into sharp relief. The market is now in the process of price discovery, weighing the massive opportunity of a leveraged Bitcoin accumulation strategy against the very real and very high cost of that leverage. The wild intraday swings are not noise. They are the market arguing in real time about what this company is